GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's seen more ups and downs than a Six Flags roller coaster. I'm your host, Jay Hamilton. It's Monday, June the 23rd. And today, once again, we are joined by one of our favorite guests, William Quigley, seasoned investor, co-founder of Tether, the most used stablecoin in the world, also co-founder of Wax Blockchain, a leading blockchain and bridge technology. Today, we're going to talk a bit about the news of the day, the Iran war and the impact on crypto and broader markets as well. We're going to look at Bitcoin and the lack of sustained momentum that Bitcoin has that just seems to be holding it down so it can't quite break out. We're talking a little bit about alts. What's going on with alts? Is there going to ever be an alt season? William and I were chatting before recording here, and it feels like it's never going to happen, but don't give up hope, everybody. Things are still positive in the long term. Also, we got to talk about stablecoins. Circle IPO. Circle just continues to catch a bid. Wall Street obviously very excited about more exposure to crypto. And we're going to talk about the Genius Act, what's going on in legislation, some positive momentum there that not a lot of people are talking about, but honestly, the news for crypto continues to be good. It's the macro side that keeps on hitting us in the face. Before we jump in, got to let you guys know quickly, Milk Road is hiring right now. We are hiring a podcast host for our macro podcast, a head of people, and an operator to help operate a bunch of the things that we do here. So if you're interested, hit milkroad.com/careers or the link in the show notes. Would love to meet you and have you join our team. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Nexo, the platform that grows your crypto without locking it away. Without further ado, William, welcome back to the Milk Road Show.
Glad to be back.
Always a pleasure to have you, William. It's always good to get somebody with your level of expertise and experience in investing to give us a bit of a deep breath in these moments when we tend to freak out when markets just go wobbly like they are right now, just red and then green. Let's just start by I know you're not a macro trader. I mean, let me actually just ask you this question. When macro events like the Iran war erupt like they do right now, do you trade around those events? How do you play?
I don't. No, what I hope is that my portfolio is positioned to do what I want it to do when these events happen. But as I've said many, many times for many years, the greatest gift that can happen to all of us as investors is having some quantity of available money, not invested directly in the market or, held in like maybe government bonds, something. And I recommend this to everybody to do that, so that when there is a super disruptive event, and there's a sudden drop in the price of whatever assets you're looking to buy, whether it's the S&P 500 or some global index, you can get in. And being able to acquire positions when there's massive fear in the market is probably it's almost like the one area where you can beat the big institutional investors, because a lot of them, they can't take the same sorts of risks that individuals can take. And my view, which is probably a lot like Warren Buffett's, is there's always safety in buying assets that have much lower prices than they did the day or the year before. Now, obviously, there's some things that are just going to go away. If you buy stock in Blockbuster, while the trend is that that's going to disappear, that's a different story. But when an attractive company or asset is just hit in a major sell-off, that's more about people just all wanting to put their money in gold or some other protected area, it's a great opportunity to pick those assets up at a discount. Now, in the case of the recent U.S. bombing of Iran's nuclear sites, so far anyway, this morning, the S&P 500 has not really taken a big hit. I know last I looked, it was basically flat. So that opportunity doesn't exist, from the events in the last couple of days, but it's just a good thing to keep in mind. Big global disruptions, macro stuff that's not company specific or industry specific, but still leads to a sell-off in the things you want to buy. They're great opportunities to come in. So that's something to be looking out for right now, because any war, if one gets really bigger than just Iran and Israel, and I don't know if you want to say the U.S. is at war. I guess we are in a way. We bombed some countries' facilities, but it's not a substantial commitment yet by anybody but those primary belligerents, Iran and Israel. There's a chance that we'll see a big sell-off as people just pull their money out into things like gold or whatever. So we should be looking for those opportunities. Obviously, hospitality and travel related companies, I think, really worth a look at, because you will see a dip anytime things like important regions flare up with conflict, but those come and go.
How do you feel about the way crypto has responded? I mean, obviously, one of the challenges with the beauty of crypto is 24/7, 7 days a week trading. The negative of that is when a macro event like this happens and catches the weekend, crypto can get slammed.
Yeah, can and almost always does, right? I think in the short term, specifically to your question, I'm not surprised we saw a pushback or a pullback in all the crypto assets. BTC, taking the lead, and then everything else follows BTC, because Wall Street has just put Bitcoin in the sort of risk asset bucket, the same bucket they'll put any like recent IPO stock. It's something they want to increase their position in when the markets are feeling bullish, and it's among the first assets they sell when the markets are scared. That is how Bitcoin's treated these days by Wall Street. And since all of the altcoins are basically move in kind with Bitcoin, but they just are more amplified, we saw, this weekend, another big sell-off in the alts, and it's becoming harder and harder to see if 2025 will have any sustained rally like we were hoping in the year post the halving. I would say more broadly, it is curious, I think, to all of us who are involved in Bitcoin and the other tokens, how what was supposed to be the asset you went to when the world was doing bad things, it was supposed to behave a lot like gold. Bitcoin really behaves just like any other traditional globally traded Wall Street asset. It's not doing what we kind of hoped it would do. And so when we make these linkages to Bitcoin being digital gold, I think that's a harder argument to make in recent times, because gold is where people move to, Wall Street investors move to in times of uncertainty, and it's not Bitcoin.
It certainly feels like we are headed in that direction, right? You are seeing more and more a tie between Bitcoin and gold, but we've still got a ways to go. I mean, certainly if you look at the, central banks are buying Bitcoin, or at least continuing to hold it and on their balance sheet if they got it through seizures, right? You've got Abu Dhabi, who bought a bunch of Bitcoin at the beginning of this year. I think it was like 500 million, but we don't have this sustained momentum that we need. We just keep getting smacked by macro factors. Like, it just feels like we're balloon held underwater a little bit right now. Like, and I don't know when the pop happens. I don't know. Do you think that we still, like, I know you were very bullish coming into 2025. So was I, right? Like very bullish,
Yeah.
And so, but I don't feel less bullish than I did before. I actually feel more bullish because, of all that Trump has done, the Stablecoin Act, all the legislation that's coming, the shift in crypto sentiment from institutional buyers, the ETF continuing to do so well, and I'm talking mainly about Bitcoin right now, not really the alts yet. But
right.
It just, I don't know, but has your stance changed? Are you still just as bullish?
I not as bullish as I was at the beginning of the year, because at the beginning of the year, everything was moving in accordance with what had been similar to the prior three halvings.
Mm-hmm.
We were getting we had the kind of the post halving April 2024 kind of lull, then some substantial sell-offs in August, September, which I like to see. So we're still on trend. And then we finished the year immediately pre-halving. We were in 65,000 or so BTC price. At the end of the year, we were 100,000, close. And that was all very consistent with what I expected to see in a post-halving year. So going into 2025, where Bitcoin would rally in multiples. I was hoping to see a 5x multiple between the halving and maybe when it would top out at the end of 2025. Well, 5x of 65,000, you're over $300,000. So, and then beginning of January, it was like, yeah, all right. And then Trump coming in saying great things. But so far, it hasn't turned out that way. If I look at gold, since the beginning of the year, gold's like 28% above the price at the beginning of the year. Bitcoin's 8%, right? So, and the S&P, obviously it was up like 20 and then dropped 20. And now it's, I think, up 2, right?
Yeah, I think it's about even, basically.
Yeah, call it break even. So, but S&P is kind of break even. But for a post-halving year, halfway through the year, which now we're halfway through the year, to be up like 8% year to date, that's substantially less than what I was hoping. Now,
would that, like, what that says to me is that we have had more external volatility from political events and the headline risk that Trump creates for all the good that he does for crypto and crypto adoption and crypto legislation. He certainly is he's not great for volatility in markets. So what that says to me is, that it just feels to me like nothing has changed. The timeline has just been pushed back. That your bullish sentiment could still, your 300K could still come true. 300K is obviously a high target. I still feel good at about 200K by the end of the year, so long as we don't have any of these more of these macro events. Now, very difficult to predict whether we'll have more of these macro events. I don't know. Nobody knows, right? But I look at the Iran war feels to me like something that, give it a few weeks and we'll get through this. I don't know what will happen with the war, but from a market perspective, I think the markets will adjust, we'll price it in, and we'll get through this. The bigger thing was tariffs. And even that was a huge people don't realize how much of an impact that had on markets, and
Yes.
the volatility and the uncertainty that created far greater than this Iran war is. And we got through that, right?
Well,
And so
we're on a 90-day pause, right?
True. There is a danger of what happens in July.
In July, Trump is going to drop the hammer again, I assume. Now, maybe something will change if the U.S. is increasingly committed in neutralizing Iran. You know, maybe he'll say, "Hey, economy can't take the tariff thing while we're trying to deal with Iran." So that could put a pause, but I think it's quite disruptive and difficult, and really even unfair to have this looming tariff bomb over us. And the president says, well, we'll wait 90 days. But there's a lot of companies that, smaller companies in particular, that are wondering about, do we acquire goods? You know, if it's going to take a month or 5 weeks to ship goods to the US, you know, pretty soon we're going to be in that window where you don't want to be buying those goods and have them hit the dock right as a 125% Chinese tariff hits us. So I think it's very negative and must be suppressing the market in some ways, which means it's suppressing crypto. But I also, I mean, I agree wholeheartedly that tariffs were way more substantial to the markets than this, you know, since I've been a child, all I ever hear is conflict in the Middle East, right? It's been going on for a long time. So markets can deal with that one.
So it feels like we go back to your first point that right now, the best thing you can do as an investor is to position yourself so you have some cash on the sidelines, so you're able to take advantage of the Trump headline risk of what he's going to do suddenly and be prepared for some volatility down. But still, we're in a position, I believe we're still in a bull market. We're still in a buying period. And whether the timing is just the difficult thing, but I think it's within the next 12 months, right? Like, I don't know your take. Do you still think, I know you don't think 300K Bitcoin by the end of the year. Do you still think we could hit 300K Bitcoin in 2026 in this bull cycle?
So I wouldn't be holding it unless I thought we could do much better than 300K. Now, what kind of timeline, right? So that's very hard. I mean, it's like the S&P. I like the S&P. I know the S&P is going up, but don't ask me, like, you know, in 6 months, 12 months, 15 months, 18 months, whatever, will it be up or down? I don't know, but in the longer term, and for me, longer term is like 5 years. So I am incredibly confident that over the course of the next 5 years, Bitcoin will be substantially above its current price. And I'm also confident it will be below its current price at some point in the next 5 years. So I don't worry as much about Bitcoin, you know, because my time horizon's pretty long. But like anyone else, I'd like to see it go up. And I don't think it's going to hit 300 and, you know, 3x in the next 6 months. It could, but I don't think so. But it'll really be based on whether I think retail buyers come in. It's mostly been an institutional phenomenon this year, right? I think retail buyers just didn't do what they did. Maybe they got distracted with meme coins. I don't know, but I think you can like look a lot at the increase in Bitcoin and correlate it with Michael Saylor issuing bonds to buy Bitcoin. You know, Bitcoin,
and not just Michael Saylor, right?
No,
like,
that's true.
There's a huge trend of, and don't get me wrong, like Michael Saylor is a mountain compared to some hills here, but the rest of the Bitcoin treasury companies that are coming out,
there's
also
at least a couple of dozen around the world. The biggest one aside from MicroStrategy would be Metaplanet in Japan. But those like sharp acquisitions of Bitcoin definitely by these companies have definitely helped it. If you took out corporate buying, including MicroStrategy, I definitely don't think we would have been over 100. I think it'd be below that. It's a phenomenon of Bitcoin that it's incredibly influenced by spot market buying, and it takes a little bit of fiat buying for it to go up a lot. And so these companies acquiring positions have helped. Now, they could also sell. I really like the ETFs because, and I think Bitcoin ETFs currently have, I don't know, the US ones collectively maybe have 130 billion or so of Bitcoin. And what's super nice about ETFs is a lot of those are owned by in retirement plans like 401ks and IRAs in the US, and those tend to be just, set it and forget it type of buyers. So I really like the ETF phenomenon. But there's also a lot of borrowing, right? I'm constantly getting asked by different intermediaries, hey, you want to lend your Bitcoin? Some hedge fund, wants to sell short. There's a lot of that, a lot of institutional shorting. And I think that is, it kind of fulfills something that I thought was like one possible avenue we may go with Wall Street, which I've always thought was kind of negative, to be honest, Wall Street being involved with Bitcoin. And that is institutional investors are okay earning 5-10%, because if they do that with any leverage, 2x, 3x leverage, they triple that return. That's a home run to these guys. We've been spoiled in crypto and Bitcoin. We want multiples of what we bought in at. And there's an argument I guess I make about Bitcoin going up and eventually being over 200, 300. Maybe that takes multiple years. But here's my argument. This is an incredibly volatile asset. And if you go, after Bitcoin, Ethereum, and all the other tokens, they're all very volatile. No serious buyer wants to own that and accept that kind of volatility. And I'm really meaning on the downside, unless there's a flip side to that, unless it has the potential to 5x. If it doesn't have the potential to 5x, you wouldn't accept how risky this thing is. And so to me, that ultimately argues that, if people are still holding it, then it's going to continue to go up, and it will be at multiples from here, because if people didn't believe that, there's way safer things to own, gold.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or EURX, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Yeah. I mean, it's a great point. The amount of confidence that institutions are showing in Bitcoin is a big check mark that I think is easy to look past, because you're right. Retail is not here right now and has not been here basically this entire year. This has been all institutional money flowing in. Retail, as you said, retail got wrecked by meme coins last year and got wrecked by altcoins. Didn't get wrecked, but didn't get what they wanted from altcoins because we have not had an alt season. And the expectations that people have shoot them in the foot because they expect these mega multiples constantly, monthly. Like it's a ridiculous expectation, and
it is, yeah. And so if you take retails like substantial collectively, substantial buying support out of the equation, then you're getting more bumpy moves as different larger institutional players come in and acquire a position. I would like to see companies that are taking substantial positions, and I'll exclude MicroStrategy because Michael Saylor's been very clear what he wants. But these other companies, I would like to see them articulate what their plan is. And whenever you get if you're a public company, you actually shouldn't be playing around a lot with the cash you're holding. You should try to do better than inflation. But as a former CFO, I would tell you I would be wary of going into assets where I could lose half my principal. Having said that, when companies get substantial cash positions, and many of them do, tens of billions, many of these companies historically have been willing to put some of their money into longer duration assets. From my background as a venture capitalist, we would always see big companies. It was usually kind of trendy too, which I didn't like, but a big company would say, we should get into venture capital, right? Now, with venture capital, your money is illiquid for 10 years, could be even more. And there have only been a few public companies that did this well, I thought. Some of those are still around. Google Ventures did this well. The granddaddy of this is Intel. I think they started in the 80s. And they had a very experienced group of investors, right? I co-invested with them many times. But so many other companies, they would see this fad, they would see how the markets were like, everybody should be in venture capital. And then they would dedicate some quantity of venture capital. And then markets would turn around, venture capital would be in a slow time. And then they would sell off the portfolio and kind of damage the valuations of those companies that they were in. So a lot of us older VCs got burned enough to where we were like, we don't want corporate money unless you've had a long experience in managing your venture investments. I'm going to put the same kind of perspective on companies that are taking positions with Bitcoin. What I'd like to see is them say, look, this is like just a small percent of our cash holdings. We intend to hold it like we would in a venture capital environment, maybe 5 years, 10 years, whatever. When we decide to exit, we'll exit responsibly. We won't sell it all at once. That's kind of what I would like to see. But that's not really what I see with all of them. Some of them, most notably MicroStrategy, are like, this is what we're going to be. But some of them are, I think, are just like, hey, we can get our stock to go up, and therefore my stock options will be worth more, and I can sell my stock options while Bitcoin rallies.
Completely.
That doesn't help us as much.
Yeah. There's certainly, there is a bit of a fad moment happening with these Bitcoin treasury companies. And don't get me wrong, I agree with you. I think done right, it is a great play and a great strategy. But I think that when you have a moment like this, as you said, where you see dollar signs and you see immediate return, you can have people go after it for the wrong reasons without understanding it, without understanding the risk, the volatility, and then they might sell at the wrong time or they might get blown up. So thankfully, nobody is huge yet, other than MicroStrategy. Like, nobody is so big that they, if they did blow up, they wouldn't impact the market that much. But when you have, probably by the end of this year, I would guess we're going to have hundreds, maybe even 1,000 of these. I wouldn't be surprised.
I don't think we'll have 1,000, but
no,
I could see 100. The thing you've got to appreciate is how difficult it is to do this as a public company, because you train your investors over years, decades. This is how you should value this business. These are the metrics we care about. Even introducing one new metric, it takes time, whatever that metric might be. And so now you're a CFO, you have a amazing quarter, your core business really performed, but you have a loss. And you have to say, wait a minute, that loss is due to this unrealized decline, unrealized gain or loss in a Bitcoin holding, but ignore that, but okay, so now I can't just look at how you performed. I have to see that, operationally you did well, but this holding you had did poorly. But now I'm wondering, why do you hold that? And so I actually believe CFOs probably don't like this. They, because their attitude is probably, go take the dividends we give you, Mr. Investor, and go invest those dividends in Bitcoin, or take some other portion of your portfolio. At some point, by the way, even if you look at MicroStrategy, now it's been a few weeks since I looked at the company's financials. But so this is rough, but they've got, what is it, $60 billion of Bitcoin, something like that, $100 billion market cap, now in the S&P 500. And their business, the MicroStrategy business, does $450 to $500 million annually, top line. 125 million a quarter. Like $100 million of operating income, whatever. And it's been doing that for formed in 1989. It's probably been doing that for 15 years or something, right? It's flat. It's a software tools business that nobody cared about, like nobody. And so to me, and yet all of the employees work there. So you got 1,500 employees, 1,450 work over here. All of the SEC reporting is like this little business, but Wall Street values it as this Bitcoin holding company. It seems practical to me that the CFO would lobby to just spin off that irrelevant business. Like, no one is valuing MicroStrategy based on we did 10% better in our software business this quarter. Nobody cares. One could even see, I would certainly say this if I was a MicroStrategy customer, I'd be like, how much attention does anybody in your company care about? The only thing you guys are looking at is the price of Bitcoin, because that's your RSUs or stock options, that's what's going to affect that. The software business is irrelevant. So they should spin that thing off. I'm sure obviously this is not an original idea. I'm sure they've been thinking about it for a while. There may be some technical reason why they don't. Maybe the SEC issues would be different, but as the CFO, I would be like lobbying for that.
Are you invested in MicroStrategy or MetaPlanet or any of these?
No, because it's simply a proxy for something that I have more of than I probably should. I'm quite exposed to crypto.
That's why we got to get you on the show. That's why we got to get you on the show. I want to go back quickly to something you mentioned earlier, and then I want to talk about stablecoins and the Genius Act and Circle IPO, because there's so much to talk about there. But you brought up earlier 401ks, and something happened about a month ago that I feel like nobody really noticed, which was previously the Biden administration gave guidance that you should not hold crypto in your 401k. It was not like it was only guidance. It wasn't a flat out rule, like you can't do it, but it basically led nobody to hold crypto in their 401k.
And was this guidance through the SEC, or do you know?
This was, I don't actually know where it was. I think it was through it was Department of Labor. It was through the Department of Labor.
I see. Okay.
So the Department of Labor had given guidance saying, do not hold Bitcoin, crypto in your 401k.
By the way, terrible advice. And
terrible advice.
Tell you why, but it's terrible advice. Not even being a bullish guy, I would say it's terrible advice. But but please continue.
So now that has been removed, and now the Department of Labor, I don't know if they have given guidance or if they have just removed this basically anti-crypto stance, but there's 8 trillion in assets in 401ks in the US. So you have a massive asset class that if they start to invest in crypto and Bitcoin, which I think they will slowly, it won't be fast. They're not going to be the fastest buyers. But as you said, when they do buy, they hold. They're not buying to sell. They're not quick traders.
That's right.
They're buying to hold. And so that is I think the inflows that will come from that nobody's really noticing that or seeing that. And I think that could be a large inflow throughout the future in the coming years.
To me, what it'll come down to, because remember, 401ks have gatekeepers. First, the corporation that sponsors the 401k, and then the institutional platforms that offer the 401k menus, right? And there's so many ways to like examine your comment there, because for many years, we're talking many decades since I was a public accountant in the 1980s, and these 401k vehicles were invented. One of the things that struck me always was the lack of guidance to people who are investing for like the ultimate long haul, like 30, 40 years, right? If you're in your 20s. And I saw all kinds of awful things when I was at the Walt Disney Company. I'm sure it's not like this now, but when I was there, 80s, early 90s, it was very common for the CEOs of companies to really shill the employees to buy more of the stock of the company they worked for. Now we can all figure out really quickly what a freaking terrible idea that is, right? Like the one thing you shouldn't own in your 401k is the stock of the company you work for, because Jesus, right? If that company does poorly for whatever reason and you're fired, you lose your job, and the investment you had, it was linked to that job, and now you lose in both places. And so it really bugged me even back then. I remember the first time I looked at the Disney 401k. Now this might be 1990 or 91 when I looked at it. It was nearly 90% invested in Disney stock. What a terrible idea, right? Like this should be a diversified thing. So it's been a it's been such a challenge for corporations to figure out how do they encourage people to use the 401k option, because you also get matching, but to also, it's like Goldilocks. There are people who will only invest in like treasury bills in their 401k, which is also terrible, right? And then there's people who will try to do really risky things and too much of it. What I would, the best advice I could give anybody would be just put it in an S&P 500 index, because where goes U.S. stocks probably is where the global economy goes. But I see nothing wrong with having 1% or 2% of your 401k assets in Bitcoin. Like, it could, if it does really well, you could get an extra couple of percent annualized return. That sounds great. But I would be the first to say, don't put 10% even, certainly not more than that. It's this, this little thing that can enhance the yield. And if collectively $8 trillion, does 1%, what is that? 80
billion.
$80 billion of buying. That's, done over a period of time. That could be kind of nice. One of the things as I've gotten older, one of the things that it really strikes me is when we went from what we call defined benefit pension plans. This is where the company told you how much money you're going to get when you retire. And then in the 80s, or the 70s, but it really impacted the 80s, we went to defined contribution plans. And that's where you can invest a certain amount, and how much is left when you retire is up to the markets, right? When we did that, we said, now you're responsible for deploying your investment capital. What we didn't do is educate people. And while there are lots of online resources, I get it. I always thought corporations could have done a better job. And having been in the financial roles in these companies, I understood there was this worry that if the company tries to give you advice and it doesn't work like you want, you could be sued. I felt like Congress should try to give some indemnifications to companies offering legitimate advice. So many people I've known have, they've made almost nothing over 25 years on their retirement account because it was in bonds, government bonds. So to me, that was a much bigger risk that the Biden administration probably should have been educating us about, versus putting a little bit, if you don't like it, just put a cap. Only 1% of your 401k can be in stuff like Bitcoin, and call it.
And it comes back to Operation Choke Point 2.0, and Elizabeth Warren and the crusade that the Biden administration and the Dems had against crypto. It's our memory is so short. We forget how bad it was, and that's again why I come back to why I still am so bullish despite all this macro stuff. You and I were talking before we recorded. If we were sitting here right now, a year ago, and talking about all of the shift in the political side, and I wanted to actually chat about the stablecoin, the Genius Act, quickly as well. Like, we would be thinking, "Wow, I can't believe how bullish that would be, and I can't believe how good the setup would be." But we've been greatly impacted by macros so far this year. And also, people forget we had a really good run to end 2024. And that is often forgotten.
I think the real story in 2025 has been at the highest level, just the fact that alts have really failed to do much, right? And alts are always linked to the performance of Bitcoin, but their performance is magnified on the upside and the downside. And then, the fact that Bitcoin hasn't taken off is I think almost exclusively a result of Wall Street buyers, because retail didn't show up, just putting this in the asset class of high risk stuff you only hold when it's a risk on. That's sort of and now you and I could have thought, well, if we had imagined this scenario, we would say, but those facts will be overwhelmed by all the positives, right? Like all the things Trump has been doing. But it turns out, no. The Wall Street aversion to risk is much more of a factor than these incremental improvements in the policy perspectives of government officials in the United States or the world for that matter.
That's well said. That's well said. Okay, let's look at Circle quickly. So Circle opened, IPO'd beginning of June, I believe June 5th. So it's only been a few weeks. IPO'd at, was it $80 or $88? Can't remember exactly. And now we're sitting at 250. And it really, it boosted quite quickly. And then it boosted again June 17th, because on June 17th, the Senate passed the Genius Act, bipartisan vote, great support behind that. So there's really good momentum for the Genius Act. How are you feeling about Circle? How are you feeling about stablecoins?
Well, obviously, I love stablecoins. As I've said many times, stablecoins are the real story of crypto, right? And I know all the Bitcoin maxis out there will say, "How dare you say that?" I think Bitcoin ultimately will be the sideshow. We already have more trading volume in stablecoins than we do in Bitcoin, so that's a fact, and it's been that way for years. And stablecoins have so much function, right? I won't make this a video about stablecoins, but there are very few innovations in the world where the effects of those are exclusively positive. Like stablecoins don't have a negative, and not a meaningful negative. I mean, maybe if you're a payment provider that's been gouging consumers or businesses for years, and stablecoins won't allow you to do that. Okay, so in certain targeted groups will do poorly, but for global business and global consumers, stablecoins are extremely positive. The Circle IPO is in keeping with something I've witnessed since I've been in the market. So call it, over 30 years, which is when a trend becomes popular and Wall Street says, this is an area to focus on, one or two companies become kind of emblematic of that trend. And that would typically be the ones that IPO first, where everybody says, oh, if you want exposure to Bitcoin and you don't want to buy it, well, MicroStrategy does this thing. So it becomes the proxy for Bitcoin for people who don't want to own it in its direct form. Well, there is no other public pure play way to bet on the growth of stablecoins for US investors right now than Circle. And just as Wall Street was starting to become aware of the value of stablecoins, Circle does its IPO. Obviously not coincidental. The market cap, I think, of Circle is what, 60 billion or so, I think.
Yeah.
And it does, one thing, it's stablecoin. The market cap of Coinbase, I think, is 75, 80 billion, call it 78 or something. That's really intriguing though, right? Because Coinbase owns a piece of it, or is entitled to a piece of the revenue that Circle generates. And so I sort of feel like if Coinbase is, or if Circle is worth what markets say it's worth, Coinbase should is undervalued substantially, right? And
Mhm.
these sort of relative valuation games are very valuable to go through because usually they do correct themselves at some point. So I don't think Circle is undervalued. So I think right now Coinbase is undervalued.
Yeah.
And I
Yeah,
would say,
Coinbase is at 76 billion
yeah,
and
76
Circle's
billion.
at 61 billion.
Right. So that's fascinating. And when you consider that, even if you go back 24 months, I think you would have really struggled to find, you talk to 10 random people on Wall Street. If 2 of them knew what a stablecoin was, I would have been surprised, right? And so it shows that Wall Street's starting to understand this. And it's a long way from when we did Tether, and even crypto people would say, what a waste of time. Like this, why are you putting dollars on a blockchain? No one cares. I should say, it's interesting that, because I could have gone 2 ways with the Genius Act and the price of Circle. The Genius Act invites a lot of other companies in the US to issue their own stablecoin. Presumably, a lot more competition would be bad for Circle, not good, right? So I think sometimes Wall Street people, like, they get the headline, but they don't think through the details. I would have made the passage of the Genius Act, to me, it would have been neutral on Circle.
Mm-hmm.
I could give you reasons why it would be good, reasons why it would be bad. If all of the banking companies that wind up issuing stablecoins and corporations who are going to issue stablecoins, if they do them outside of the blockchain, because the Genius Act doesn't require a blockchain, and it's really more what I've talked about before, it's just like an updated SWIFT or ACH payment network design, then Circle could do well for a long time because it's offering a different product, right? A blockchain-based stablecoin, which to me is really the definition of a stablecoin, is kind of it's attractive to a lot of people who use them, and so maybe in the long term we're going to see these different approaches to stablecoins. So Circle will maintain its very strong position. It is a pure play. So where goes crypto probably also is where goes Circle. I expect the bulk of the stablecoin usage among consumers and businesses in the US and around the world will not be like Circle. It will more likely be these new stablecoins issued by banks, financial institutions, and big consumer companies that want to avoid a lot of fees.
Mm-hmm. Yeah, it's if you're an investor and you believe in stablecoins, how do you get exposure? What's your view on the best way to get exposure to stablecoins? Are you investing in Circle? Are you investing in the blockchains that Circle uses, like Ethereum or Solana or another? Are you investing in one of the decentralized stablecoins, like a Sky or an Athena?
Yeah, I mean, I'm biased, right? I like blockchain. I like the DeFi space. So as an overall investor, I would not be that attracted to something like Circle, even though I think Circle can do well. I would be putting it in innovations in the DeFi space where, stablecoins are. I'd be investing in those tokens because as more, even though I think we've thought about all the great use cases for stablecoins, the truth is once it gets in the hands of billions of people, there will be things we didn't even realize that people want to do, especially when they're blockchain enabled, that'll give opportunities to entrepreneurs and to blockchain-based businesses that are fast in their feet. So that to me is way more interesting than the a traditional stablecoin that's going to follow the Genius Act rules. But if you're like an investor, you're a hedge fund or a mutual fund, right now, the pure play, the only pure play you can get is Circle. Banks like JP Morgan, B of A, Citi, those are coming together in joint ventures to do stablecoins, but there's going to be a tiny slice of their value, of those giant companies' value related to stablecoins. People like pure plays. Wall Street likes the pure plays. So to that end, I expect to see more of these things. I expect more people to take pure play stablecoins public.
Yeah. William, we're going to have to end it here because you and I could keep talking for another hour and we're already over time. We didn't even get to talk about alts. So we'll get you back on the show as we always do. And we'll have to talk about alts.
Hopefully they'll have rallied.
I was going to say, we'll talk about alts when alts matter again. The only thing I would say on alts, let me just ask you this quickly. Are you giving up on alts? Or are you still
of course not.
Holding?
Alts are where all the innovation is. There's no innovation in Bitcoin. Even Ethereum, it's kind of done what it's done. All the innovation is in alts. If you are interested in figuring out what the future, it would be like somebody in tech saying, I've give up on venture capital investing, right? Like, where do you think the innovation is going to come from? So the alts is where it's going to be.
All right. Well, we'll get you back on when alt season is happening, and we'll get your take on which alts and what the opportunity is. William, as always, thanks for joining us today.
Thank you. Good to be here.
Thanks for listening, and everybody. I got to remind you, as always, that none of today's episode is financial advice. I'm not your financial advisor. William is not your financial advisor. Investing is risky, and you should always do your own research and think before you make investments. If you are trying to understand a few things that we talked about in today's episode, such as the macro madness that is happening right now with the Iran war and how that might impact your investments, highly recommend you subscribe to Milk Road Macro. It's our new newsletter that comes out twice a week. It's free, and it gives you a 5-minute or less download on what you need to know in the macro world to understand that part of your investments. Also, if you want to understand stablecoins and some of the DeFi and the decentralized stablecoins that you can invest in, you should check out our pro reports on Sky and Athena. We'll link to those in the show notes. Thanks as always for listening in today, folks. Have yourselves a wicked awesome day. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.